Hello viewers, welcome to the Proving Trading Setups. Myself Brijesh Bhatia. In the last couple of videos, we discussed about indicators being a stochastics, RSI, and I shared my strategies on them. If you are liking our strategies, do subscribe to our YouTube channel. Follow me on my Telegram channel where I share the charts on a daily basis. And if you're liking our video series, do comment that how do you feel so, and if in case you have any implementation issues, do comment there. I'm here to help you out. Well, in this video, I'll be sharing one key important ingredients of technical analysis. I would say the volumes. They play a key role in identifying the trend and how. Let's understand what is volume first. So basically, volume is a total quantity bought and total quantity sold. Okay, be it equities, be it commodities, be it if you are trading equities, Nifty, futures, Reliance, Infosys, anything, be it commodities like crude oil, gold, silver, even Bitcoin, volumes play a key important role. Well, smart investors like FII, DII, they can't hide their trades, and that can be identified by these volume bars. When there is a spike in volume bars, you get to know that some FII activity has happened. And in India, we get to know the bulk trades what are happening. And by that, you can judge that the bulk trades happened in XYZ commodity, XYZ equity, or changing the hands is very, very important. So, volume will help you identify what FIIs and DIs or smart investors are doing. So this will play a key important role in identifying your trends, and how to identify the trend is very much important. So let's look at the first chart where I've shown the price and volume. So if you look at the upper side, the price actions has been there, and the lower panel is the volume. So that's the structure how it shows on the charts. Now, how to analyze that volumes, which is very, very important. So we'll study one theory which is called as VSA, volume spread analysis. And this is well known theory into the markets. And if you, I would say, expertise this strategy, it is very, very helpful for you to even generate intraday trades, even generate the swing trades, even generate the longer term trades. So let's first understand what is spread. So if you look at the left hand side on your screen, there are two blue and red bars. So it's basically how to read the candles. So when your close is higher than open, it tends to the blue candle or the bullish candle. When your close is lower than open, it tends to be a bearish candle or the red candle, whatever color you choose on your chart. Sometimes people use green and red, some people use blue and red, whatever. Now, if you look at the middle blue and red part, that is the difference between open and close, and the body. It is termed as a body into candlesticks, and that body differs a lot. If the body is bigger, which means that the lot of bullish or bearish moves has happened. If that body is smaller, which means that it was slight a narrow range day, and even if the body is smaller and you see the wings, which is the difference between if you look at the highs and lows, I would say the body upper part is the wings which is towards high, and the lower is towards the low. Even that is big and body is small, which means that the bulls and bears had a tug of war during the day, or during the hour, or during the week, whatever time frame of the chart you are using. Now look at the right hand side of your screen, how to analyze this. So when your body is big, be it a bullish or bearish, doesn't matter, and you have a huge chunk of volume over there, which means that the activity on that trending day has happened on a larger scale. If it a bullish candle and with the huge volume bar, which means that the huge accumulation has happened, huge buying activity has happened. Second, if you look at the body is slightly bigger over here, not that big over the first one, but if you look at the second, slightly has a body, but if you look at the volumes are slightly less, which means that slower activity has happened, but slow and steady accumulation might happen, or slow and steady distribution might happen. The third candle, where a body is very very small, wings are very very low, and volumes is less, which means that it will undecisive day, no participation day, and that candles are slightly avoided, I would say, when you want to play with volumes. The fourth candle, now if you look at again, the first and fourth candle has a huge body. The spread is very very big, but look at the volumes in the lower panel between first and fourth. If you look at the first volume is higher, if you look at the fourth volume, it's lower. So for me, it was just a flick of trades which is not useful. And probably I'll look at a follow up in case after that follow up if the volumes are increasing, yes or no. If the volumes are not increasing, then this could be a, I would say, not a great confirmation candle for me, because even the body is big and volume is not picking up, which means that it was a low volume activity day. So I would slightly ignore. So you need to keep these four candles when you want to do volume analysis. Let's look at the chart and example. You'll get to know. Look at Acha. Before that, how to identify this and how to play with this VSA. So first, when the high volumes on resumption of trend, when the consolidation and the trend resumes or breakout happens, and the spread is very much big with volumes, which means that the trend has resumed after a consolidation or reversed after a fall. Second, the low volumes on pullback is very very important, and I'll show you an example as well how this plays a key important role. So after a rally, if there is a pullback into the market and the volumes are decreasing, which means that uh, the positions which has gone long is still intact into the system. They haven't exited their position. The smart players are still holding on to their positions, and every pullback they might accumulate and they will wait for a good momentum to resume. Third is very very important. Bearish or bullish momentum ends when you see the decrease in volume, and I'll show you the example as well. And this is very much important when you are looking for a bearish or bullish trade after a good trending moves. So these pullbacks, if you know that the volumes are decreasing after a certain fall, and if the momentum halts out, there is a possibility that the trend might reverse. If in case the trend continues with a huge volume bar, then the trend momentum would continuation pattern. So if you look at the flag pattern or pennant pattern which people generally trades, so after a rally it goes into consolidation, and that consolidation should be with the lower volume. If in case it breaks out with the higher volume, it trend continuation. If it breaks down with the higher volume, it is a trend of reversal. So let me show on to the charts first. Look at this Reliance chart. The left one, the black, the red line. If you look at the bearish trend has emerged, and look at the volumes over here. But at the same time, when the bearish trend ended on the lower side, if you look at the trend black lines, the volumes were decreasing after a sharp fall. The volumes were decreasing and it consolidated. And if you look at the reversal, again the volumes picked up at a faster pace. So if you look at the blue line, a blue arrow mark which I have done, that the single volume bar with the price action which has confirmed that after a fall, the reversal with the lower volumes, a consolidation, and the reversal with faster volume has played very very well. So again, a good reversal has happened. After a reversal, if you look at the green arrows which I have marked, the pullback or consolidation was with lower volumes. And again, the momentum picked up with volumes over here. So again, a confirmation. So if you remember the three which we discussed, the higher volumes during the trend emerges is very very good or resumption in trend. Second, the pullback volume should be lower, and third, the bearish momentum ends with lower volume. So these are the key three importance which you have to keep quiet when you do volume spread analysis. Infosys, if you look at again, the fall was with lower volume, and the pullback was with lower volume. We see a reversal with higher volumes. Again, if you look at that one red bar which is marked as 3 over here on your charts, look at that, the positions have exited. If you look at gap up opening, the bearish, big bearish there, look at the volumes over there. And look at the high were taken after a long, long time. So these highs and low of big spread bars will also play a key support and resistance for a future momentum. So if you look at after that a huge time, if Infi has done nothing and it just consolidated before it broke out. Look at the four. the price broke out and the volumes were increased, which again we have seen a huge uptick into the Infosys. So that's what on the volume analysis. So let me discuss the strength over here and weakness. It helps in identifying what are the participation happening. Is FII buying, if FII selling, retail's participation helps out into the volumes. It gives an early sign of rally being emerging on the range bound markets or consolidation or pullback. It helps in identifying if it is really accumulation or it is really distribution. So accumulation happens when the volumes increase at the lower end and prices tends to go higher. It The most important is most of the technical analysis software you use or website you are using, they have all this stuff, and most of the software also the website offers or software offers this scanner where you can use at the volumes using the moving averages on volume, the volume spot, whatever. So most of the scanners are available in this software. Well, with this strength there are some weaknesses well of the system. It's need lot of patience to analyze this, and you never know it was one flick of volumes or it is continuing, as I showed in Infosys, where the most of the distribution happened and it went into the range bound. Though the prices didn't reverse, there was no short opportunity happened, but if you look at the consolidation, it happened for a longer time. So you need to analyze those stuffs. Analyzing it wrong can lead to missing those upside rallies or the falls. If you are a bearish FNO trader, the fall is also important for you, so you tend to miss out. So just to summarize, volume plays a key important role in identifying emerging trends, pullbacks, resumption in trend, end of a bearish momentum, bullish momentum, and they provide astonishing risk reward when the trends emerge with after a pullback with the volumes. The risk reward trends is amazing, and the most important is being into the artificial intelligence era now. You have lots of scanners available, so you can use that, and it really confirms the volume, confirms the trend that it is emerging or it is filling out. So sometimes it happens that the price breakout about it and there is no volumes, it indicates that the breakout is false. So confirmation helps, volumes helps in confirmation the breakout or the trend emerging. So that's all in the volumes analysis. So
In next video, we will be discussing how fund managers spot winning stocks.
and this will be very important for you all, and based on the volumes what we have done in this video, this will really help out on implementation of the next video. Signing off, Brijesh Bhatia. Thank you.
I am delighted that you joined me to learn about my proven trading setups. If you would like to hear more from me, then sign up for the Fast Profits Daily, our free email newsletters. You can click here to sign up. Thank you.